All right, so today we rebounded after yesterday's last 2 days pullback. The question is, if we don't put as much stock into the selling, do we put as much stock into the bounce back buying, or is it just continue to be noise? So I'm going to break that down in terms of what the charts are telling us and whether or not we're starting a directional move or what our expectations are for the next near-term run. That appears that we are starting right now. How much longer that might be, what the market might look like during this next near-term run, and eventually what will it take for the intermediate run to end. So I'm going to break that down in the context of the current move that we're getting, what the expectations are now, and then talk about what's driving a little bit of a risk-off trade going on. So what does that look like, and why does it seem like it might continue? Based on some signals we got today. And then we'll talk about how to trade something in one of those risk-off safety sectors. So let's go ahead and get started. Today is Wednesday, April the 21st, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. As always, you can see the rally we got, again, still between 0 and 23, so any upward or downward move still just essentially noise. As you push to a 0%, of course, we're pushing up to new highs. When you come down towards 23%, nothing really matters until you break it. And so keep that in mind here. The longer we kind of stay here, though, without any push between either one of these lines, then that moving average will just creep up higher and higher and higher, which means that we could get pretty significantly below the moving average. As you can see here, let me activate this and bring it down to where that high was. You can see that we got pretty significantly below the moving average there, and we were still just barely flirting with the moving average, with how high the moving average, or the 23% line, because of how sideways we were and how high the moving average got during that period where we were so sideways. Again, we're not to that point yet because we've only really been going sideways for a few days. But the longer we go without creating a new high, then the longer we go there. And also what ends up happening too is, as I've shown you on that Arun indicator, the longer we go sideways, the more this just drops. So you see how by the time we got down to flirting with that 23% line on that day there, if you notice, the Arun indicator had come way down, which means the 4-week high point had been gradually moving further and further to the left on that 4-week chart that I typically show you. So we got a new 4-week high point way over here on day number 1, and has been that case for so long. And then now we've been after that, getting it on Friday, it's been gradually going lower. And so far, this is the most sideways we've been since this new move started. But you can see over here, after the crossover, once we got the positive line to cross back above the negative, we actually had a pretty decent, pretty lengthy move where we didn't get a new high for for about a week and a half or so before we got a new high again over there. So it kind of shows you, how long something like that can happen. You can see we're not anywhere close to getting a new low point either. That's not going to happen. But if you look at the Russell 2000, we actually did get a bullish crossover, but that bullish crossover is not very bullish, right? If we get a bullish crossover and we're not touching 100 like this, or something like this over here where you start a new trend, if you get a bullish crossover where the green crosses over the red and you're not touching 100 like this, that's not the most bullish sign. In fact, usually it's kind of the continuation of the bearish move we had going into it. So just keep that in mind that, we got that crossover yesterday actually on a downward move, on a down day. As much as we rallied today, I wouldn't put a lot of stock into that rally. Again, it's noise anyway, but I wouldn't say that we are beginning a new intermediate run here because we haven't finished the one we're on, number one. And number two, that wasn't much of a move. And I'm again, same thing with the NASDAQ. We are flirting with its new 23% line because it actually did start a new intermediate. It did have an intermediate pullback, and it did start a new intermediate run. And still, so now that we have a new 23% line on this run, we're still okay. And we're still kind of managing this. Just barely started at the beginning of the month, so we're 3 weeks into what is typically a 1 to 3 month long trend, more often than not. So that's what's going on with the market forecast indicator. You can see here, let's go back to the market forecast chart. You can see the near-term line jump back above 50. It's not like it got above 80 again. So keep that in mind. This is a new near-term run because we are above 50. The momentum line is not getting really high either, but at least it's not oversold anymore. So this little intermediate confirmation signal played out with the near-term line dropping yesterday. So this is a nice little move. Are we going to get another 16-day long intermediate rally off of this low point? That's unlikely, but the typical range is 7 to 12 days. So can we get up to 7 days of even just a grind to the upside? Definitely could be the case as we maybe converge a little bit more towards that moving average during the next near-term run, right? The distance, the gap between these doesn't have to, we can still go up, and the gap between the two lines can actually shrink. And that's kind of what I expect will happen on the next near-term rally. Whether it lasts 7 days, whether it lasts 3 or 4 days, I expect that we'll start to converge more with that. As considering how far above the 30-day we are, we'll converge more with the 30-day during the next near-term rally or two before we finally get more of an extended decline. And during that period, the moving average gets a lot higher in this noisy window, so a drop below it would be more significant. Alright, so before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That will notify you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked our video today. And number two, you want us to do another video again tomorrow. It's a quick way to give us feedback. If you don't like our videos, of course, you don't have to click on anything. But if you do, you don't even have to watch. But if you do like our videos and you want to let us know, we really appreciate those thumbs up. Those really help out a lot, actually. Also, too, comments do too. So if any comments you have, anything we talk about, any questions you have, post those down in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. One of the things you get access to on our site for free is our Market Outlook community on our forum. So you can be able to interact with other viewers of these videos. Follow me on Twitter for more content in between the videos from day to day. Here's my handle right there, at DavidSettle42. And join our Market Outlook Facebook group that we've created. If you're watching on our blog, just come down over here and check some of these things out on the right-hand side, especially on Market Outlook live video. Again, I get asked quite a bit if I can talk about some of the trades that we've done in previous videos. Well, I do that in these Market Outlook live. So every day I do the Market Outlook. I do a live video at 3:30 Eastern time. All of our paid subscribers, whether you're monthly or premium, get access to that. So check that out there. Also, we have a schedule of trading rooms, which you can see our upcoming trading rooms right here. Again, all of our paid subscribers get access to all of those as well, whether you're monthly or premium, get access to all of our trading rooms. Our premium subscribers, of course, get access to all of our tools and class forums and our Q&A sessions. Like you can see Brandon's coming up here, over here on the right. Come over here and click on this heart. It opens up a new tab. Click on that like button right there. Also click on this thumbs up icon, opens up another new tab. Click on that like button as well. Again, the more you do that, the more people will see our content, right? The people that actually follow our accounts will see it because of all the engagements it has. So it really helps us out when you do that. Also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here. All right, now let's take a look at the long-term chart that we have here. And you can see, again, just how strongly bullish we are. But very similar chart to what we saw on Monday. The weekly candle hasn't changed very much. We didn't get a new high yet. Same thing on the NASDAQ. Same thing on the Russell. It's still very neutral, kind of transition type candle. We do have a falling PPO, but that PPO at 16 is still almost about double. Almost double what the S&P is at. So it again shows just how strongly bullish the NASDAQ had gotten during that run. Way strongly bullish. So it's kind of a hard time maintaining that bullishness because it ramped up a lot more. And the NASDAQ had ramped up over here up to about 14.5%. Again, that's what about we did get up to about 20% on the Russell. We got up to about 14.5% there in September before the NASDAQ kind of peaked and went sideways. And then it rallied, obviously, like everything else did, just not as strong as the Russell did. That it still stayed in the low teens, whereas the Russell got up to the high teens, and then eventually up to 20. But you can see now it's down below 10%, whereas the Russell is still easy at 16%. So it's still a lot harder for the Russell to maintain any kind of momentum, but still hasn't broken that 50-day moving average. And if and when it does, then that's when you'll get the bulk of the selling, right? And you'd have to break the 23% line for that to happen, and that's when your intermediate pullback will have started for that. If you take a look at the RSI and the CCI for the S&P, we're still in bullish territory, even with yesterday's decline. And so, again, grain of salt there. Not so much in the Russell 2000. We're between 40 and 60, and we're back above negative 100, but you can see how, we were below negative 100. So that's, we were a little bit more bearish over the last couple of days, and that this kind of shows where the weakness will be once we do get more of a broader weakness will be in that Russell 2000. You take a look at the directional movement index for these, and you look at the small cap index, and it's just very, very bearish, very neutral. You can see the Russell 2000, whether you're looking at the cash index or the IWM, we're above 30 on the negative index there and below 20 on the positive. So we actually have a trending move. That's why your ADX is going up the last couple of days. That's a trending move. And we'll see if we end up getting light pink shading again like we did on that decline. But this one would be coming down from a lower high point instead of compared to the previous high that we started. That's the Russell. The SPX, as you can see, is still in this trending mode, but positive, right? So you're actually above 25 on the ADX, and if you take a look here, I don't know why the NASDAQ does this. Get off those arrows here. But you can see the NASDAQ, the ADX had gotten to light green, because remember, again, it did have a pullback. The other index didn't, but the NASDAQ did. It did have a pullback here. So that's why we're not as strongly bullish on this go around as we were on some of the other indexes. From a Bollinger Band standpoint, you can see SPY is still up above the value area, but not so far to the downside. Not so far down to it as, say, like IWM. Look how top heavy. I mean, we're getting to the point where this little area here will be the point of control, which it's very rare for a point of control to be outside the value area. So once we shift up here, you'll probably see once the point of control shifts up to the upside, you'll see the value area shift up to the upside too, which will mean we'll be very, very top heavy on IWM, and it'll just show just how easy it will be to fill in that gap down to that 78% retracement level of this near-term decline, pretty much down to the pre-COVID. That's ultimately where the pre-COVID high is, down into that spot. And again, from a 2-year standpoint, again, you can just see how top-heavy we are. Much bigger point of control down here, and a much bigger gap that we have to fill in once we break the neckline of this very widely viewed head and shoulders pattern that's going on right now on the Russell 2000. All right, now let's take a look at the intraday chart, and you'll notice that, look at the rally we have going on the intraday, moving up to close to the new high tag. Not quite there yet. We never did really drop below like last week's low point, which is where there's the gap in volume pretty much for the S&P 500. If you look at IWM, we did break below that low point before bouncing back up and actually getting through yesterday's high, which is where the point of control is for the NASDAQ. But there's still heavy volume in this area. If we can get some follow through tomorrow, that will be really positive for the small cap index. More than likely, we won't get the follow through tomorrow, and we'll come back down towards this area, towards yesterday's low. Maybe not in one day, but gradually start moving our way back down towards this week's low point, which would not be positive. So we'll see how, again, you expect resistance like this to hold until it doesn't. That's why I expect that. But if it can break that resistance, then that would be a very positive development for the Russell, and may maintain this mature intermediate trend for a little bit longer, right? And for a little bit more distance, or the new trend that you have, as I mentioned, going on the Russell 2000. Let's take a look at today's volume. 66 million shares below the average. You can see the trading range was 5 points, so that was actually above average on the trading range, which is at 4 points. So, but the volume was down at 66. That's right there. We're still below 1% on the ATR. So, but more days like today will get us up back above that 1%. When you get back above the 1%, that will typically coincide with more of some weakness, some intermediate trend, intermediate pullback developing. So just kind of keep an eye on these bigger moves. If we can maintain this bullishness today and just again grind with really small moves going up, that's probably the likely scenario with the Russell kind of doing its own thing. One thing you do see, volatility is back down to extreme lows again, right? We're in the lower half of this range. 80% is the extreme low mark. So that's going to limit the downside for volatility for the VIX when we're already this low. When you look at, again, I kind of showed this in class today. When you look at when the VIX gets down to these 80% mark, you notice it kind of stops going down. Doesn't mean it has to go up. It can go flat, but it kind of stops going down because it's harder for it to go down when it's already so extremely low on a relative basis. Every time it gets to this level, it kind of stops going down. Over here, it kind of stopped going down at that point, and again right there, it stopped going down. And so we've been going down heading into this level, and now I would expect it will probably stop going down. However long we stay sideways, who knows? But I expect the next bigger move on volatility to occur to the upside whenever that ends up being. More than likely, what that will end up taking place when the range for the volatility gets to lower levels. So you can kind of get an idea of the range here on volatility, this dropping down. See how this is the absolute value, right? So this is the relative number, which actually hits the dip at the high point. But when you look at the range here, like on the absolute basis, it gets to really relatively low levels before you make a jump higher. It gets to low levels before you make a jump higher, and gets down to these really low levels. And again, you can see we're actually even at lower levels now on the absolute ATR or value than we were over here. So that kind of again suggests that the next move on volatility will be up rather than down. And just remember, up moves occur in stages, so that doesn't necessarily, just because an upward move in volatility doesn't necessarily mean that we'll get an intermediate pullback, as we've seen, because we haven't got one in a while. So expect the next up move to get up towards that 90% mark. The next move after that to maybe get to the 95% mark, and then after a new low, you might be able to range up towards 105% and start more of an intermediate decline. And so again, another idea that we might be another near-term rally or two away here, because we kind of need to get that upward swing going first and start getting this ATR going up. This ATR going on the VIX to the upside too, and that just hasn't necessarily started yet. It's still very, very low there. All right, so to summarize our technical outlook here, again, the trend is still bullish. We're still in an up and down noisy period with a bias to the upside. There's still opportunities for us to grind higher at a slower pace than what we've seen in the last few weeks, but grind higher on another near-term rally or two. Let the volatility start to creep higher a little bit over the next week or two, and then that's when we would expect something more. But the trends are mature. I've shown you that before on a near-term basis. We had a very long near-term run that just barely ended. Expect some shorter ones now. The intermediate run, of course, is very long-winded. We're already almost a month into the new one on the NASDAQ that's been formed, going on 6 months now on everything else. The The market sentiment run is on a very mature rally. As I tweeted out, the long term, we're in this current bull cycle now for over 10 years. That's very mature, right? That's now creeping up on the 87 to 99 2000 run for the markets that peaked with the tech bubble, with valuations about as high as they are right now. So, a very similar environment. It doesn't mean we're going to fall tomorrow. It just means, just manage risk appetite and manage expectations, right? And take what you can get while you can, and don't shoot for the moon, trying to make gains that you maybe have missed out on up to this point. That's what ends up happening a lot with over position sizing, is we're trying to make up gains that we didn't get for whatever reason. So it doesn't mean that we can't get good gains while we're still kind of riding a mature trend. And this watching for signs of when that mature trend will turn around, and they'll happen slowly, and they are happening. We see that low volatility. I mean, there are some signs. We've seen the intermediate pullback already occur on the NASDAQ. We've seen it get really close on the Russell and how sideways we are there. So there are signs. We've seen, as you'll see here in a minute, the safety trade still kind of creeping up with new trends, but those signs haven't fully converted into sell-off, right? Or, again, I know I hate to use the word sell-off because it's usually associated with extremes, and a sell-off an exhale is not an extreme. It's just an exhale. It might feel extreme to people who got in really late or over position sized, but they're not extreme. And so that's kind of where I feel like we're at right now, in that grinding upward mode, especially coming off of a really strong move. And that's okay. What do you think? Do you agree with that? Do you disagree? Let me know in the comment sections below, especially if you disagree. What makes you more bullish than me right now, or what makes you more bearish than me? What charts or indicators are you looking at that gives you that posture? And share that with our community down below. All right, let's take a quick look at what's driving the price action today. And you can see the rally today. That still didn't keep gold from rallying, and it still didn't keep real estate or bonds from staying up. So on the week so far, still looks like, despite this little rally we had in small cap stocks today, still looks like a little bit of a risk off week, so to speak. Let's take a look at some of these different asset classes here. Let's take a look first, and we'll look at this one here, at how the dollar is doing, because that's the one that looks like it had broken out over here above that 23% retracement level, the long-term line. But then now, in this retracement zone, still kind of stuck up here. It's unable to really kind of, continue that breakout. And the concern is, are we going to come back below that 23% line and maintain the drop, the pullback? Especially because that would be a safety trade if it were to do that. And we see that happening in like gold. Look at the new overbought cluster at the beginning of an intermediate run. So intermediate line makes a run up to the reversal zone and gets a cluster. That's a very, very good sign actually for a bullish move in gold, which is kind of a risk-off trade. And you can see bonds did the same thing, getting a cluster today on a new bullish intermediate run. Those when you get clusters at the beginning of runs, they kind of solidify the run. So it kind of gives you an idea that we might, this risk-off move might just be beginning when you look at it from different perspectives. Commodities would be a part of that. A pullback in commodities would be a part of that. And you can see we haven't really, had a significant decline yet. We got to the 23% retracement level over here, but still haven't broken that level, as we are still kind of up in this area, flirting with new highs after getting these clusters. So we'll see if you look at it from a DMI perspective, commodities had been so parabolic right here, had been so parabolic, and now kind of this one last hurrah, so to speak. As we started a exhale without actually starting one, we got a really noisy move down to that 23% line, and it's been stuck in this sideways action as the ADX continues to fall down and set up for the possibility of that kind of move, which can tend to happen when you've had such an extreme bullish run. You can see here from an Ichimoku cloud standpoint. There's the strength of the run, and then now we're kind of on a moderately strong trend and unlikely to really be able to maintain its own new strength, similar to the new intermediate run the Nasdaq's on, unlikely to maintain its own strength in the wake of context of a broader risk-off move that may be developing here. So when you look at it from a sector standpoint, the same move that we've had so far this week, from a sector standpoint, you can see again a little bit of a risk-off move. Utilities had been up until today. There's your real estate, healthcare still up, consumer staples holding its gains, and then materials rallying on with gold doing so well, and all your cyclical areas underperforming the market. And if you look from a 12 grid standpoint here, they have some room to underperform as they're still well above moving averages. The good bullish moves today, but very strong moves on the risk off trades, getting a cluster on healthcare and staples today. Very, very strong moves there. You can see with the clusters we got early on, and these others suggest that there's opportunity still for some relative strength. In fact, when you look at it on the rotation graph that we like to look at here, right here, let's update this for today and look at the relative rotation. There's your XLK and XLY rolling back down, and look at XLU and XLRE turning back up without dropping below the 100% mark, and staples moving back up after barely dropping below. So and then XLV you can see turning back up as well. So renewed move higher in these safe haven areas as these cyclical areas, XLY, XLK, XLC, are moving in the wrong direction. So one of the areas inside of healthcare, while it can be considered a risk-off sector, one area inside of that sector that can also be considered some growth, has some growth elements to it, is AbbVie. AbbVie had a nice little breakout move here today. Dark green shading and a green line on the market forecast chart. You can see 3 green arrows on its chart with a little bit of a bump in volume when we first got that 3 green arrow signal there. When you look at the 2-line versions, you can see the 17-day and 30-day moving average. There's starting to be a little bit of a divergence here, a moving away of these lines away from each other. Look at the RSI and the CCI, and you can see breaking above 60, getting close to negative or positive 200. The DMI is showing a breakout pattern, getting above 30 and above 30 in the positive indicator, below 30 in the negative indicator. See, we didn't get that over here when this made a run up. The positive indicator didn't even get above 25. The negative indicator was pretty darn low. But now we're getting a directional move, hence the move higher in the ADX. You can also see too on the Bollinger Bands, unlike this previous rally we had over here, this time we're getting above the upper band, or we were really darn close actually to getting above the upper band, and by the end of the day a little bit of a pullback. As you can see, it also kind of kept where is it? Right here. We were right there getting above the upper Bollinger Band as well as the upper Keltner channel. So a little bit of a breakout signal we're getting on AbbVie. So it sets us up for a bullish trade. Again, we've already placed this trade in the Market Outlook Live earlier. But if I were to sell a bull put spread, knowing that the market itself isn't as broadly bullish, we do have earnings coming up, so we do have to keep that in mind. But with that break even there, full position size with that break even here, that break even ends up being right below that 30-day moving average. Here, let me pull that up. But the idea being that it's a little bit of a breakout. If we end up nullifying that breakout by getting back below the 30-day moving average, then I'll end up taking, I'm trying to go for $343 reward, so I'll end up taking a $343 loss if we were to break back down below that support. All right, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum, where you can open up any new thread with any questions or comments you have. Reply to anybody else's threads. Remember, everybody has access to that forum, even our free subscribers. So post and let's keep this conversation going there. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, or subscribe to our YouTube channel. like our videos, as well as like us on Twitter and Facebook, and comment. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.